So our report is all about bonds fundamentals, module 17. So here are the learning objectives. First, provide a definition for the bonds, identify the different classification of bonds, what are some of the basic features of bonds that affect their risk, return and value. Lastly, differentiate between the long-term bond to a short-term bond. So, bonds. Bonds is like an IOU. Yung sinabing IOU is isang document that recognizes um, the existence of debt. Yung bond is a debt security, wherein borrowers issue bonds to raise funds from investors who prefer to lend them money for a set period of time. When you purchase a bond, you are making a loan to the issuer. Ginagamit ang borrower ang mga funds upang suportahan yung mga activities ng company habang investors is nakakukuha ng interest sa kanyang investment. So, yung bonds market value is pwedeng magbago siya over time. For example, ang ABC companies wishes to borrow $1 million to fund the development of new factory, but it is unable to do so through a bank. So, ABC company plans to raise funds by selling $1 million funds, $1 million in bonds to the investors. The ABC agrees to pay its bondholders with 5% interest every year for the next 5 years. 5 taon ha? With an interest paid semi-annually. Because each bond has a face value of $1,000. Your ABC is selling a total of 1,000 bonds. Bonds as a short-term investment. When we say short-term, it tends to have a lower interest rate risk than intermediate or long-term investment. But it's still possible to lose your principal. And sa short-term bonds kasi is, kung yung investor is mas gusto na mababa yung risk niya or low risk, and yung mas top priority niya is yung safety, you go for short-term bonds. And if an investor is mas prefer naman niya yung may higher risk, you go for long-term investment. Kasi sabi dito, ang long-term investment is may higher risk na loss. And keep in mind lang na yung long-term investment is hindi siya appropriate para sa mga who needs to use the principal within 3 years or less. Kasi yung investor's money is nalalock up siya for a long period than a short-term investment. Who issue the bonds? Companies and governments issue bonds frequently to fund new projects or ongoing expenses. Because some investors use bonds in hopes of preserving the money they have while also generating additional income. Kasi bonds are often viewed as less risky alternative to stocks and are sometimes used to diversify a portfolio. So how bonds work? By buying a bond, you're giving the issuer a loan, and they agree to pay back the face value of loan on a specific date and to pay you periodic interest payments along the way, usually twice a year. So when an investor purchases a bond, they are loaning that money, or the initial amount is called principal, to the bond issuer, who is usually raising money for a project. Sabihin na natin na ang isang corporation corporation is gusto mag-expand but walang enough na money or funds for expansion. So they may turn to the public for their financing needs. So yung one way to gain more capital is by issuing bonds.
So good day everyone, my name is Chaina Kait Grace K. Ocampo and I will discuss the next topic, which is the characteristic of bonds. The first one is yung par value. So when we say par value, It is the stated face value of the bond na stated in the corporate charter. Or in other words, ito yung amount of money na babayaran ng mga bond issuer sa mga bondholder at the maturity date of the bond. And itong par value daw is isa sa mga pinaka-importanteng characteristic ng bonds or even ng fixed income instrument dahil it determines its maturity value and as well as yung dollar value of a coupon payment. Usually, yung par value daw for a bond is typically $1,000 or $100 because ayan daw yung karaniwang denomination in which they are issued. And according sa na-search ko, bonds are not necessarily issued at their par value dahil pwede din itong ma-issued at premium or at a discount. Depende sa level of interest rate in the economy. Kapag yung bonds daw ay trinade above par, it is premium. While kapag yung bonds naman ay trinade below par, it is discount. The second one is yung coupon payment. So when we say coupon payment, it is the number or the amount of dollars of interest na binabayad each year. And according sa na-search ko, the amount or the coupon payment is calculated by multiplying the interest of the bond by its face value. The third one is yung coupon interest. So when we say coupon interest, it is the stated annual interest na ibinabayad sa mga fixed income securities and it is primarily applicable to bonds. In other words, yung coupon interest daw is yung annual interest rate na marireceive or matatanggap ng mga bondholders na galing sa bayad ng mga bond issuer and base ito sa yield kung kailan yung bonds ay inissued. Next is yung fixed rate band. So when we say fixed rate band, it is a type of band na mayroong fixed interest rate throughout its entire life or term. Yung fixed rate daw is indicated daw ito sa trust indenture at the time of issuance and is payable on a specific date hanggang sa mag-mature daw ang isang bonds. And yung maganda dito sa fixed rate band is yung mga investors, malalaman nila kung gaano kalaki yung interest na ma-earn nila and for how long. As long as daw na yung bond issuer does not default or call in the bonds. And also, yung mga investors daw na gustong mag-earn or kumita ng guaranteed interest rate for a specified term, ay pwede daw mag-invest or mag-purchase in this bond. Dahil according sa na-search ko, yung fixed rate bond daw ay isa sa mga safe investment option for an investor's portfolio. Next is yung floating rate band. So when we say floating rate band, it is a type of bond that characterized by floating rate of interest, na kung saan yung interest rate daw ay nakadepende on the interest rate prevailing in the market. Or in other words, itong floating rate band daw ay mayroon siyang variable coupon payments na nangangahulugan na yung interest rate daw ay nagpa-fluctuates based daw sa reset of benchmark rate at regular intervals. Generally, yung mga governments, financial institution, and yung mga corporation, yung nag-i-issue ng ganitong bonds to borrow money from the public. And yung interest rate daw on this bond ay pwedeng bayaran quarterly, half-yearly, or annually depending on the bond terms. Next is yung zero coupon band. So when we say zero coupon band or also known as accrual or discount band, it is a type of band naman daw na hindi nagbabayad or walang annual interest during the life or term of the band. But instead, binibenta or tinitrade daw ito at a discount below par value. And according sa na-search ko, yung mga investors daw ay kadalasang nag-i-invest or nagpe-purchase in this band dahil yung zero coupon bonds nga daw are issued at considerable prices lower than the par value. Next is the maturity date. So, when we say maturity date, it is a specified date na kung saan yung bond ay magmamature na. Kaya ito din yung specified date na kung saan yung par value or principal amount daw ng isang bond ay kailangan ng bayaran ng buo ng mga bond issuer sa mga bondholder. Next is yung call provision. So when we say call provision, it is an option or provision na nakalagay sa bond indenture or sa bond contract na kung saan ina-allow or binibigyan ng karapatan yung mga bond issuer na i-redeem yung bonds under specified term below the maturity date of the bond. And in exchange, yung mga issuer ay magbabayad ng premium over the face value of the bond. Next is yung sinking fund provision. So when we say sinking fund provision, it is a provision in a bond indenture or bond contract na kung saan nire-require yung mga bond issuer to set aside a specific amount of asset or money on a certain dates para mabayaran nila yung mga bondholder kapag nag-mature ang isang bond. Or in other words, itong sinking fund daw ay ginagamit as a collateral in case na hindi mabayaran ng mga bond issuer yung mga bondholder in the future. Next is yung convertible bond. So when we say convertible bond, it is a type of bond naman na kung saan binibigyan ng option or karapatan yung mga bondholder to convert or exchange the bond into common stock or into predetermined number of shares in the issuing company or firm at a certain times of a bond's lifetime. Next is yung warrant. So when we say warrant, it is a long-term option naman daw but not an obligation na kung saan binibigyan ng karapatan yung mga bondholder to buy a stated number of shares na merong fixed price for a specified period of time. And itong warrant daw are frequently included in the bond issuance so that the buyers acquires both the bond and its accompanying interest payment. Next is yung putable bond. So when we say putable bond, it is a type of bond with a provision na kung saan inaalaw or binibigyan ng karapatan yung mga investors to sell the bond back to the company prior to maturity at rearranged price of the bond. Next is yung income bond. So when we say income bond, it is a type of bond naman na kung saan yung face value lang ng bond yung nababayaran or binabayaran. And nagpe-pay lang daw ng interest dito kapag merong silang enough earnings. Also, yung income bond daw usually issued by companies na merong financial difficulties or bankruptcy. And last is yung index purchasing power bond. So when we say index purchasing power bond, it is a type of bond naman na kung saan meron daw itong interest payments based doon sa inflation index para daw maprotektahan yung mga bondholder from inflation.
So, here are the features of bond. First is face amount or face value. This face value is also known as par value. It is amount of money that a bondholder will receive when the bond matures. In most cases, a newly issued bond sells for its par value. Kapag ang isang bond trades for more than its face value, it is said to be selling at premium. And when a bond sells for less than its face value or face amount, it is said to be sold at discount. Second is the issue price. Yung sinabing issue price, yung issue price is yung initial price at which the bond issuer sells the bonds. Then yung third is the maturity date. Yung maturity date is the date by which a debt must be fully paid off. Yung principal amount of the debt is entirely paid on this date. Therefore, no more interest expenditure is incurred at the choice of the debt issuer. The maturity date of various debt instruments can be shifted to an earlier date. For example, yung issuer of bond may have the option to purchase back to the bond before its formal maturity date, so decreasing the time during which interest is accrued. And fourth, pang-apat is coupon or the interest rate. The interest rate is the amount of money received by the bondholder as interest payments. It is generally represented as a percentage of the initial investment. Tinatawag siyang coupon because certain bonds have a physical presence that you can rip off and redeem interest. And lastly is coupon dates. A bond settlement date is the day when money first changes hands. When a buyer pays for a bond, it does not have to correspond with the issue date, which is the first day a bond is available for sale. The start and end coupon dates are when the first and last coupons are paid, respectively. So, yung government securities, these are the government debt issuances used to fund daily operation and special infrastructure and military projects. The government securities are issued by a central government, state governments, and semi-governments authorities, in which also consists of local government authorities such as city corporations, and municipalities. So, yung government securities is my feature shock. So, yung first is issued at face value, then no default risk as the securities carry sovereign guarantee. Third is ample liquidity as the investor can sell the security in the secondary market. Fourth is the interest payment on a half-yearly basis on face value. Fifth is no tax deducted at source. Sixth is can be held in DMAT form. Rate of interest and tenor of the securities fixed at the time of issuance and is not subject to change. 8 is redeemed at face value on maturity, and 9 is maturity ranges from 2 to 30 years, and lastly is securities qualify as SLR investment, unless otherwise stated. Mortgage and asset-backed bonds. When we say mortgage-backed securities, these are also referred to as mortgage pass-through. Any goods or asset that can be used in exchange for another similar good or asset can be traded to raise capital is defined as a security. Let's say na if a person A wants to buy a house but doesn't have the money for it, the person A goes to lender B and says to the bank that will lend him the capital for the house. This capital becomes the mortgage, and A agrees to pay back the mortgage over a 30-year period with an interest. So the bank B starts to get steady cash flows from person A. Now, Bank B is being approached by a lot of people interested in buying houses, and it starts to give out loans to these people to ensure that it has enough money to give us mortgages. So B pulls all similar mortgages together and sells them to an investor in an open market. This pool of mortgages that are used to raise capital for Bank B is known as a mortgage-backed security. Asset-backed securities naman is a type of loans that are typically securitized, includes home mortgages, credit card receivables, auto loans, or recreational vehicles, home equity loans, student loans. So when a consumer borrows, this borrowing becomes an asset for the company that issued the debt, likely a bank or a consumer finance company. The differences between the two is the mortgage is these are collateralized by mortgages. Unlike sa asset, these are backed by securities such as loans, receivables, and leases.
So, I'm here again to discuss the risk of investing in bonds. The first one is yung interest rate risk. So, when we say interest rate risk, it is a type of bond risk that result from changes in the interest rate na kung saan kapag yung interest rate daw ay tumaas, yung face value or yung price naman ng isang bond ay bababa. And kapag yung interest rate naman daw ay nag-decline or bumaba, yung face value or yung price naman daw ng isang bond ay tataas. Kadalasan, nangyayari itong risk na ito most especially kapag isi-sell yung bond before its maturity date. And kapag nagkataon na yung interest rate pa that time ay mataas, it's like you may end up selling the bond for less than you paid for it. The second one is yung reinvestment risk. So when we say reinvestment risk, it is a type of bond risk na kung saan kapag yung interest rate daw ay bumaba or bumababa, yung mga investors daw need nilang i-reinvest yung kanilang interest income and yung iba pang return of principal, whether it is scheduled or unscheduled, at a lower prevailing rates. The third one is yung inflation risk. So when we say inflation risk, It is a type of bond risk na kung saan yung inflation daw ay nire-reduce niya yung purchasing power ng bonds, future coupon, and principal. And also, vulnerable daw yung bonds kapag tumaas yung inflation because inflation can leads to higher interest rate. And hindi iyon maganda dahil gaya nga ng diniscuss ko kanina sa interest rate risk, kapag tumaas yung interest rate, bababa naman yung face value or yung price ng isang bond. Next is yung market risk. So when we say market risk, it is a type of bond risk na kung saan yung buong bond market are decline. And hindi iyon maganda dahil kapag yung buong bond market ay nag-decline, yung face value or yung price of your bond investment will definitely fall. Anumang quantity or types of bond ang meron ka. Next is yung default risk. So when we say default risk, it is a type of bond risk na kung saan may possibility na yung mga bond issuer ay mabankrupt and hindi niya mabayaran yung mga obligations niya, which is yung pagbayad ng interest and most especially ng principal when they are due. And if that payments are not made according to agreement in the bond indenture, the issuer can default. Next is yung call risk. So when we say call risk, it is another type of bond risk that a bond will be called by its issuer because some corporate, municipal, and agency bonds ay mayroong tinatawag na call provision na na-discuss ko na kanina. And ito nga yung provision na nakalagay sa bond indenture na kung saan inaalaw or binibigyan ng karapatan yung mga bond issuer na i-redeem yung bonds at a specified price on a date prior to maturity. Yung pagbaba daw ng interest rate, maaaring mas mapabilis nun yung redemption ng callable bond na nagiging sanhi ng mas maagang pag-return ng investors principal than expected date. So in that scenario, yung investors need niya tuloy or mapipilitan tuloy siya na i-reinvest yung principal at the lower interest rate. Next is yung liquidity risk. So when we say liquidity risk, it is a type of bond risk naman na kung saan yung investors may have difficulty in terms sa paghahanap ng buyers kapag gusto na nilang ibenta yung bonds nila. Kaya napipilitan na lang sila na ibenta iyon at a significant discount to market value. And according sa na-search ko, yung liquidity risk daw is greater for thinly traded securities such as yung lower traded bonds, bonds that were part of a small issue, and bonds sold by an infrequent issuer. And the last one is the event risk. So when we say event risk, it is a type of bond risk naman na kung saan yung mga bond issuer daw ay nag-undertakes ng leverage buyouts, ng debt restructuring, mergers or recapitalization that increases its debt load na nagiging sanhi ng pagbaba ng value ng bonds or interferes with its ability to make timely payment of interest and principals. Also, yung mga event risk din daw ay maaari din na unexpected na mangyari dahil sa mga natural or industrial accidents or regulatory changes. And usually, yung event risk daw ay applies more sa mga corporate bond kesa sa municipal bonds. And that's all. Thank you.